According to data from the Ministry of Finance of the Russian Federation, the federal budget deficit for the first 2 months of 2025 amounted to 2,007 billion rubles. This is despite the government's planning an annual deficit nearly half of that amount. The significant budget shortfall is explained by enormous expenditures. In January and February 2025, state treasury expenses reached 8 trillion rubles. A large portion of this money was spent by the Kremlin on continuing the war against Ukraine.
In the first 2 months alone, they spent half of the pre-war budget of the entire Russian Federation. The war requires a huge increase in spending, and you can see how strong this pressure is on them.
The National Wealth Fund, which the Kremlin created in 2008 to stabilize the economy during times of crisis, is also shrinking. Since the start of Russia's full-scale war against Ukraine, it has decreased their hold. After 6.5 trillion rubles was spent to patch up budget gaps and support state corporations amid escalating sanctions pressure.
By increasing military spending to its highest level since the Soviet era, Russian authorities have spent more than 20 trillion rubles over 3 years on weapons production and payments to contract soldiers recruited to the front lines. This has led to the creation of a money bubble, not seen in the country since the 2000s, followed by an inflation surge. In an attempt to curb this inflation, the central bank raised the key interest rate to a 22-year high of 21%. Meanwhile, budget reserves are nearing depletion. The accumulated budget deficit over 3 years has reached 10 trillion rubles, and the government has spent 2/3 of the National Wealth Fund's available resources to cover it. From the Moscow Times publication.
Another lifeline for the Kremlin, oil and gas revenues, started leaking after Russia's full-scale invasion of Ukraine. The price of Russian oil fluctuates daily but is gradually approaching a critical point for the budget. Sanctions pressure from the US, EU and UK on Russia's so-called shadow fleet is also having an impact. Russia's largest operator, the company Sovcomflot, lost half of these profits in 2024 due to Western restrictions.
Oil and gas revenues in the Russian budget decreased by almost 4% in January-February compared to the previous year. Even though oil prices weren't very high last year, this had an impact. We saw that discounts on Russian oil were increasing, and the price of Urals oil was around $60 or lower. So, significant damage has been done to Russian oil and gas revenues in the first months of the year. The International Energy Agency reports that in February, oil and petroleum product export revenues fell by about $3 billion compared to the previous year, and that's noticeable.
In this context, even Putin has forced to publicly acknowledge the economic issues in Russia. He advised the government and the central bank to work delicately in order to avoid the collapse of the Russian economy.
Business is forced to tighten its belts due to the actions of the authorities. Starting this year, the profit tax has been increased from 20% to 25%. More than 10,000 enterprises surveyed by the central bank in January identified the increased influence of credit interest rates and economic uncertainty as factors limiting their investment activity. Minister of Finance Anton Siluanov called his responsible budget one of the measures currently being implemented by the central bank and the government to slightly cool the economy in order to reduce inflation, so that the key interest rate could be lowered. From the Moscow Times publication.
High interest rates are also detrimental to the Ministry of Finance, experts explain. The cost of subsidizing interest rates on concessional loans and servicing national debt rise proportionally as the interest rates increase. In 2025, the Russian government plans to spend over 3 trillion rubles on these expenses. In practice, this amount may grow as the central bank loses control over the economic situation in the country, reported by Alexandra Zaslavis, Larissa Petruk, UATV News. Construction, coal industry, transport, engineering and the automotive industry, 4 sectors of the Russian economy at risk, reported to Putin by Deputy Prime Minister of Russia Alexander Novak. These sectors are at risk due to their solvency indicators or the need for credit restructuring, Novak explained. The real reason for these problems is not disclosed by the Kremlin. Publicly, neither Putin nor his officials admit to the dire state of the economy, though it has become impossible to ignore the catastrophic trends.
President Vladimir Putin has grown increasingly concerned about distortions in Russia's wartime economy, but domestic activity has become strained in recent months by labor shortages and high interest rates introduced to tackle inflation, which has accelerated under record military spending. That has contributed to the view within a section of the Russian elite that a negotiated settlement to the war is desirable, according to two of the sources familiar with thinking in the Kremlin, from a Reuters publication.
Record military spending has driven inflation. The response, higher interest rates, have led to Russian business being unable to service their credit debt. According to estimates from Russia's Center of Macroeconomic Analysis and Short-Term Forecasting, 1 in 5 industrial enterprises in Russia is at risk. This means we can expect a significant number of corporate bankruptcies in the near future. Experts predict that 2025 will be a year of tightening belts for the Russian economy. The International Monetary Fund forecasts that economic growth in Russia will slow by nearly 3 times to just 1.5%.
Издержки высокие, плюс, конечно, сейчас идет.
Costs are high. There is an increase in all resources that are consumed. Not everything has manifested yet. This year, we will most likely see a sharp rise in railway tariffs, as well as a sharp increase in road transport tariffs. There is also a big crisis in road transportation, which will affect the final product prices in supermarkets. On the industrial market, costs are increasing.
Russia's response to any crisis, repression. Putin has ordered the police to, quote, ensure economic security and cleanse the country of corruption. In Russia, anyone deemed connected to the West or insufficiently loyal to the regime can be blamed for economic issues. Over the first 10 months of 2024, Russia opened 18,000 corruption cases. In some cases, this led to the nationalization of private businesses.
For instance, corrupt origins became the grounds for the nationalization of Russia's largest pasta producer, Makfa. According to the Moscow Times, 29 companies were nationalized for violating anti-corruption laws, from the Moscow Times publication.
Price increases, inflation, and a shortage of workers. Moscow continues to deny the negative impact of sanctions on the economy, but the effect is clear, as are the results of record financial and human resource expenditures to continue Russia's war against Ukraine.
В России инфляция многофакторная.
In Russia, inflation is multifaceted. The central bank tries to make it seem like everything is only about the insane influx of money. This is not true. It's convenient for them to explain that a lot of money is being pumped into the budget. They now try to claim that the Ministry of Finance is spending less money, which is very laughable. If the Ministry of Finance had its way, it would spend less money, but the military demands, give us money. So what can the Ministry of Finance do?
In 2025, the Russian economy will become even more dependent on the military-industrial complex, according to British intelligence. This is due to inflationary pressure and corporate defaults in civilian industries. In 2025, inflation in Russia will exceed the central bank's target of 4%. If interest rates remain high, businesses' pressure will grow. For ordinary Russians, this means further price increases on consumer goods are inevitable. Reported by Alexandra Zaslavets, Victoria Smirnova, UATV News.